Hello, everyone. Good evening, good afternoon, good morning, whatever time it is from wherever in the world you're joining us. We are so happy you're here for our webinar, The Teen Investor's Playbook, Start Building Wealth Before You Graduate. My name is Anna Vandeveld. I'm a senior advisor with College Advisor. Really happy to be helping moderate this webinar. Um, Please note that we have a Q&A set up. You can be submitting questions to that at any time. We're going to get to as many as we can at the end of the webinar, but no need to wait until the end to type your questions in. Go ahead and put them in as you think of them. And I think that's all the housekeeping on my end for now. So it is my pleasure to introduce our presenter, Annaline Dinkelman. Annaline, can I turn it over to you to introduce yourself?
Yeah, thank you very much, Anna. A big welcome to all of you here tonight. I look forward to teaching you a little bit about investing. And you're probably now wondering, where is my accent from? I'm originally from South Africa. My husband was one of those lucky people to win a green card in the immigration lottery, and we moved to New York during the 1990s. And then I went to work at Morgan Stanley, a big Wall Street company. I loved it there, but after 10 years, I felt I needed a lifestyle change. And I became a day trader, 180-degree turn from Wall Street. But when I became a day trader, I realized I was really lonely. In those days, we did not yet have Zoom and online video like now. So I started to do tours about the stock market. I just put up a website with under construction. And based on that, my very first client was a high school student group on a field trip to New York. And I never looked back. I learned I really love to teach teenagers. And by 2020, I had an office on Wall Street and I had classroom space. But the pandemic brought everything in person to a halt, and I took my classes that I was teaching live online, and that's how I'm here today. Thank you very much. So what I'm going to teach you tonight is understand a few basics of the stock market, how to choose companies you love and see how to invest in them. A few common investor beginner mistakes to make, and then I'm going to end with opening an account for your teen. So at the end of this, you will at least know what your next steps are. Because I have lots of adults, I just have to say this. I'm not recommending any stocks or giving investing advice. I'm going to use examples to show you what is possible or how the stock market works. So you're probably here because you know your teen would be better off if they start investing now. And the one thing that the teens have that we don't have is time. If you start when you are young in the stock market, it's not about timing the market, it's about time in the market. And just like your kids are growing up, and it takes a lifetime to grow up, so is your investments growing. So when you think of your money, it's a three-part your money life journey. Under 20, kids don't realize this, but they are so lucky because we are paying for everything. The kids may have a job, but once they graduate, the picture changes, and now they will have to take care of themselves, get married, and start a family. And during this time, and when you're younger, you need to start thinking about what is going to happen to me. How am I going to pay for myself when I stop working and I retire? I think this is my most scary slide. When you look at the piles of money, they are not growing up and probably going down in real life. So to put money aside for the future, you can save. So when you have a savings account, your money is safe and it's always there. It's very low risk. Nowadays, you don't hear about bank robberies much. And your money will grow. You will get interest, very little, but a few pennies for every dollar. But when you invest, you buy something, stocks or bonds, something that you expect will grow in the future and hopefully will give you a much higher return over time. Investing is also risky. you could lose some money. So when a stock or the stock market is down, it can take time to cash out. So when you manage your money, you have to think some money you save for short-term goals, like buying a bicycle, paying for the family vacation, but invest for something that is a much bigger value. Like you probably all have money set aside to pay for your teens' college in the future, buying a house. And for investing, if your child starts now, you can also set them up for independence. Many parents realize that your kid may have dreams to become a dancer, be a Broadway star in the future, or be an actor. So allow them or give them the freedom to pursue their dreams if they have money coming in. So how do you measure what is best, saving or investing? So in investing, we talk about the rule of 72. So the rule of 72 is an easy formula to calculate how long will it take before I double my money. So at the bottom of my slide, you can see 2 to 4%. That is interest rates. It will take you 18 years or more to double your money. But the stock market is like 6, 7% or higher. And roughly every 8 to 10 years, you will double your money invested in the stock market. So you've all probably been through the stock market going down. And the Dow Jones is a stock market index that tracks the performance of the 30 biggest companies in America. On the left, you can see 50 years of the Dow. Many green years, telling you you have made money, but a couple of red bars in between. And on the right, you can see those red bars in perspective. You can see times when it came down quite a bit, but overall, the picture is going up. And the S&P 500 tracks the 50 biggest, 500 biggest companies in America, and is very similar to the Dow. So be aware, there will be down years, but overall in the big picture, it is up, up, and up. So when do you start? Now. So I have used a low amount of money in both the slides that I have about this. Many teens, when they have a summer job, they make about $3,000 over the summer. If they take some of that money or all of it and they invest that, and they put aside $20 a month. So $20, think one milkshake, one burger, one like Starbucks, and a low amount is something you can keep doing for many years. But if you start with too much money, you feel like the pinch, like I have no money for fun. So start with something you can sustain. So if you start when you're 15, you will have almost 300,000 when you are age 70. And each decade that you start later, you can see it's almost half the money, half the money, half the money that you will be able to save or invest when you reach age 70. So if you help your child, because parents can also contribute to their child's account, your child will have double the amount of money, and you can see double the return on your money. Sadly, in the stock market, you cannot start with nothing. You need to have a little money to grow that money. It's like planting a seed, and that seed will grow into a big tree. And you want to sit in the shade of that tree in the future. So when we talk about investing, Wall Street is the place. But Wall Street really is the shorthand for the stock markets, meaning the New York Stock Exchange and the NASDAQ, and then the entire financial services industry made up of banks, investment banks, credit card companies, credit rating agencies, and a lot more. So when we invest, each area has its own vocabulary. So for Wall Street, the language of Wall Street. Number one, look for public companies. You cannot buy shares in a private company. And the process in which a company becomes listed on the stock market is called an IPO. So public companies, and then when a company becomes a public company, you will hear people talk about the quote, meaning the abbreviation of the company name and the stock price. So in the stock market, there are many traditions. And even in the 1800s, speed was of the essence. So to send stock market data fast, they used the machine on the right to type in Morse code the stock prices. And the old telex operators abbreviated the company names to make it go faster. And that tick, 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 tick of the machine became known as the stock tickers that we use even today. So this is old stock ticker tape. And this is what it looks like with modern technology. And with modern technology, we can also make the picture very scary or very positive. Green, meaning stocks are going up, I am making money. And red, meaning it is going down. So after the stock quote and that you have a public company, you need to understand the trend. Which way is the stock market going? So when the stock market goes up, you make money. But there are many dips. And when the stock market goes down, you could lose money. I love stock charts because at a glance, you can see the picture of the stock. And here is McDonald's. Over 5 years, you can see many times there were dips, but the overall picture is up. The same for Apple. You see the hills and the valleys. So the name of the game to make money is to buy in those dips. Many great companies have a stock price that is going down. And you're probably thinking, General Mills, you eat their cereal if you eat cereal every day. Or you bake, they make a lot of food products that we use every day. So when you have a stock like General Mills or Hershey's that is down, you can see the stock is down, but it is slowly but surely, perhaps making a turnaround that the stock will be going up. So keep an eye out for companies like that. So what stocks to buy? And that is for many people, you think, oh my gosh, I need to do this big research project. No need. Look around you. If you use it, wear it, eat it, or watch it, there's a company behind it that you can invest in. Look in your laundry room. What do you eat for breakfast? Pop-Tarts? Oatmeal? Where do you go for takeout? Starbucks? Wendy's? Chipotle? What's in your house? iPhone? TV? Other electronics? What brands do you wear? Nike? Timberland? North Face? What's in your driveway? What apps do you use? So think of everything that you have. That's easy to sort of look up. What is the company doing? Make a list of those companies that you would like to invest. And then put that list on your phone. Easy. All the phones nowadays come with a stock app. And start the conversation with your kid. Instead of when you pick them up from school, say, how was school? Say, did you see what Apple did today? Did you see what Microsoft stock is doing? It's a completely different conversation, and you can get them interested in investing very easily. So once you have the conversation going, a list of companies, time to open an account and talk to your financial advisor about which is the best option for you, because there are many options. So when you open a custodial account, this is a savings account for a minor, but it could be for the stock market or for savings. So the parent, grandparents, or guardians are in charge of this. And the child takes ownership of this between age 18 to 21, depending on the state. So all the transactions must be approved by an adult. And if you invest that money well and start early, your child may have enough money to pay for college, buy a car, perhaps have a down payment on a house. And you have several options of where to open the account. Open the account where you have your account for your retirement, be it Vanguard or Fidelity or Charles Schwab or any of the other companies in that area. And then there are also app investing companies, Robinhood, Acorn, or Greenlight. Both of these companies provide investing accounts that makes it easy for a parent and a kid to start. So there are a few differences between app accounts or regular accounts at a brokerage house or a mutual fund company. At a bank or a mutual fund company or like Wall Street companies, these accounts are free. Many of the app companies have a monthly subscription fee, $5, $10 or more, but it all adds up. And then you can also, at the app investing companies, do a fractional share. Normally, at the brokerage houses or the mutual fund companies, they don't allow fractional shares. So when you buy a fractional share, you buy a dollar amount. So a share like Netflix is almost $1,000. And for many kids, that is out of their reach. So you can buy $10 worth of Netflix. And remember, when you have a fractional account, you will get a tenth or whatever the amount is of the profit of the company. But it's a great way to get your child interested and they feel they can buy something, even if they only have $100. And add to your account regularly. Just like you eat daily and you shower daily, remember to add to your account regularly. And depending on how much money you put in your account, you can see how it will grow. So $50 a month will grow to like 20,000 or so. But if you put in more money, it will grow a lot more. And if your teen has a job, you can open them a Roth IRA. So to open an investing account called a Roth IRA for your teen, they must have earned income. Babysitting, camp counselor, many kids have like jobs doing mowing lawns or something. Then you can open them an account. So that is needed for a Roth IRA. If they have their own little company or they have a job as a cashier in a store, that also counts. So in an IRA, it is pre-tax money, but a Roth IRA is after-tax money. And the benefit of a Roth IRA is the money grows tax-free. So when you take the money out, there is no penalty for the withdrawal. Where if you have a regular IRA similar to your work 401k, you will pay a penalty if you take the money out before age 59 and a half. So when you open an account with the Roth IRA, your child have 50 years or more that money can grow. And teens can start with a small amount, $100, maybe more, and that money will build over time. So as a parent, you can contribute to your child's Roth IRA, just like your employer contribute to your 401k. As a parent, you can take that role on for your teen. And teens love to get a little extra money. So help them open the account. And in the process, when you help your teen investing, you can encourage saving their money, not just spending. So the limit for this year is 7,000. And in case you are thinking, oh my gosh, I can help my child a lot more. If you put too much money in there, your child will have to pay taxes. So if the income is more than the 15,000 standard deduction, they will pay taxes. So this does not apply to normal teens. But if your teen is a working actor or they have a job on a Broadway show, this may apply to them. So investment income is unearned income. And if you make more than 1,300, you will have to pay taxes. So the law came in because parents were just trying to hide their own money in their child's account. So that's why you have the 1,300 threshold. But most kids will never reach that with their custodial account. So start early and grow your money. And with the help of a parent, that money can grow so much faster. I'm talking up a storm, but I have a few more. So the investing process, 3 steps. Number 1, find good companies. Research the companies. You have an easy way to make a list now. Look at the stock chart. You can see that on the app on your phone. Is the stock chart going up or is it perhaps going down? And the most important is know when to buy and to sell. The goal is to buy in the dips and watch your money go up. So many people have told me, I lost so much money in the stock market because they did not know when to sell. So when you buy something, have a rule. If I lose more than 10% or 20% of my money, I am selling. Because so many people think, oh, the stock is down $5. I'm just going to wait until it goes back up and I sell it. Often it doesn't. So you what? $5, $10, $20. Then you're like, I should have sold. Please don't let that happen to you. And then manage your portfolio. Over time, that changes. Investments that you buy for your child is not the same as what you as a parent have in your 401k. So to get started, you need an account and you need education. So when you have education, like we teach young people and also their parents how to invest. And for teens, we have a few programs. Our most important and flagship program is Wall Street Investing and Trading. It's a two-part program. In Wall Street 101, we teach everyone how the stock market works, the language of Wall Street. There are a few more words than the ones that I just covered, and how to research a company and to pick the best companies. You have to evaluate these companies, and we have a set of criteria. It's like a checkbox. Do they have all green checks, or are they quite a number of like red? No, maybe not the best company to buy. And then in the investing and trading program, we and the students, each one open a paper trading account. We teach them how to buy and sell stocks, how to manage risk, that you don't put all your eggs in one basket, and how to place a trade. One of the things we focus on is understanding your stock may go down. So when you buy, know when are you going to sell. And then following on these two programs, we also have an investing competition. So in this, students practice what they've learned. Great to learn stuff, but you need to practice. So it's a 7-week program, and we have weekly office hours where we coach the students. We look at their trades and evaluate and teach them to follow the market and understand the ups and the downs. Much better to practice with fake money before you start using real money. So we run our programs twice during the year. Over the winter, we run it on weekends. And this year, we're going to run it on Saturdays and Sundays. And students in our programs can alternate their sessions. I know schedules change. So your child can enroll and they can attend like Saturday morning 1 week. Next week, they can do Sunday, or they can do the afternoon and the morning. We alternate, and it always works out. So the classes run 10 a.m. Eastern and then 1 p.m. Eastern. And in the summer, we do the program Monday through Friday. So in the winter programs, there is like 2 hours of self-study for the students. But in the summer, no homework. You just come to class. 2 hours a day for 5 days for each unit. Plus then in the fall, we will be running the investing competition. And during the school here, over the winter and holidays, we also run workshops. So the workshops are 1 hour or 2 hours long. And we focus on stock market and Wall Street related topics. So Thanksgiving weekend, we are actually running workshops every single day except Thursday, where we focus on how to research a stock. Many kids may be getting money for the holidays. So great way, investing for beginners, how to start. Recently, the Federal Reserve announced that they will be accepting blockchain now from Wall Street companies. So a workshop just on blockchain and crypto, what it is all about and how does it work. And then idea to investment. Many students want to be entrepreneurs, and I hope many of them will go on to start a company that will be listed on the stock market. So that talks about the process of how startups get money and become listed on the stock market. And we also have money management workshops. In the category, I would call budgeting. You can have a lot of money, but if you don't know how to manage that money, it will not last a long time. So one workshop is all about credit and debit cards. And then student loans, car loans, and home loans. They all more or less work at the same principle that you need to understand interest rates, how you can pay it off earlier, and to read the fine print that you don't take a loan that you will later regret. And then modern money is full of pitfalls for young people. So that is what we focus on in there, keeping yourself and your money safe. So I hope you've learned a lot. If you have questions, we now have time for that. And here is my contact information. So if you scan the QR code, it will take you to the main page with all our programs. And from there, you can dig in, or you can give me a call, or send me an email. Thank you very much for being here. So Anna, do we have some questions?
We do. Thank you, Annaline, for that Annaline, for that great presentation. And folks, please keep your questions coming. We have about 15 minutes. At the bottom of your Zoom toolbar, there's a little box with a question mark in it. It says Q&A below it. That's where you can submit your questions for Annaline. We also have the questions you submitted when you registered for the webinar, so we're going to try and get to as many as we can. I also wanted to say out loud, because I forgot to say this at the top of the webinar, this is being recorded and it will be emailed to everyone, so you can reference back to everything that has been shared. All right, first question, Annaline. In a fast-changing economy, what skills or knowledge do you think give young investors an advantage?
You know, I think the ability to adapt and change strategically, like that is your most advantage. Like no matter chat cannot take that away from you. It needs to come from here. And if you have money, that you have independence, even better, because then you can make choices. Because the job market is changing, there is no doubt about it. But I know if you can adapt, you can survive. That, yeah.
Yeah, that's great advice. What advice do you have for folks whose parents are not US citizens, but their child is a US citizen? Would they be able to set up a custodial account?
Yeah. I've had many students in other countries and their parents have set them up with investing accounts. The main thing for a custodial account is that a parent or a guardian need to be there, that the child just don't spend the money or take it all out.
Um, Helpful. Do you have any recommendations for banks to bank with?
You know, I would recommend like Fidelity. Fidelity has over 900 million accounts. That means 1 in every 3 people in America have an account with Fidelity. So they are the biggest. They have the most choices. So after that, Charles Schwab, where I have my own account, because they actually bought a company, TD Ameritrade, where I had my account before. So that's why I'm with Schwab now. And then there are Vanguard. Those are the top 3 companies I would choose from.
Thanks so much. We're getting a handful of questions about this, Annaline. You talked about a bunch of different offerings, classes with you. How do folks sign up for those? Is there a cost associated with them?
Yeah,
What can you say about that?
absolutely. So for the workshops right now, the workshops are $97 each. And we have a Black Friday special that you buy one and you get one. Because many teens, they can bring a friend or their sibling and they can use that as their like buy one, get one. So that is the cost for that. Like right now, $47 in November. And the summer program, each, like the whole program for the Wall Street in investing, the 2 weeks is $950, plus the investing competition is a 200 extra. So we have early bird specials for that right now, that students will get a bonus workshop and other items with that. And for the winter, because it is a 3 live sessions plus self-study, that is $200 cheaper than the summer program. So that is $750, $950 plus 200, and then 97 right now, $47 for the programs. So all our programs are fee-based. We don't do any like free programs.
Thank you. And someone's asking, I don't think I saw on that slide with the Thanksgiving workshops, what time are those being run?
Sorry, it is not on here. It is the same as the other, 10 a.m. and 1 p.m. So
Awesome.
many of our students are from California, and I found they actually come to the 10 a.m. New York session, which is 7 a.m. in California. No one will convince me a teen cannot get up. I know they may be lazy, but they're there, and they are, especially from the 7 a.m., they dressed up ready to go to their jobs after the class. Like teens are amazing if they want to do something.
Absolutely. What advice do you have, Annaline, for a teen athlete who wants to get into investing but can't get a job because of their tight schedule?
I can understand that. So many teens like that, if they need to see if they can get any sponsorships, perhaps as an athlete. I've had a number of athletes in my programs, and they actually had prize money that they had won in competitions. And some of them have a little side hustle hobby that they are doing. And if they take some of that money and put that in the stock market, they can invest and that money will grow. So
Absolutely.
you need to have a little money, like the stock market will pay you, but if you have $100, you expect a little return. The more money you have, which will build up over time, the more money you will have to live from or take withdrawals from in the future that you can pay yourself a paycheck.
Yeah, even like that birthday or holiday money, you could put a percent of that aside and watch it grow.
Yeah. I had a student in my summer program during the pandemic in 2021, and he bought one of two stocks. And I think his investment was like $200, like that he did. I saw him last year, and he's now graduating high school. He had made turned that into $1,500.
That's amazing.
Yeah.
Uh,
So it can be done, and it was just while he was in high school. He took the program when he was in ninth grade, and that money just grew.
Great. Do you recommend mutual funds or ETFs for teens?
You need to take both. A variety of things is good. But when you are 18, you can take a lot more risk than an adult because you have much more time to wait for the stock market to recover. Mutual funds and ETFs are fantastic investments, but the return on that is not as good as when you buy an individual stock. An individual stock has more risk, but higher return. A mutual fund and an ETF is much lower risk, but much lower return. So you just have to weigh the risks, maybe put money in stocks and then other or a percentage of your money in mutual funds and ETFs.
Good advice. How do you feel about speculative investment for teens, especially in the area of AI and quantum computing or biotechnology?
It depends on your risk level and high risk, high reward, but that also equals high potential loss. So in the field of quantum computing, there are spurts of growth and years of nothingness. So if you like, and that is sometimes hard to see because students look at a stock, especially in the quantum field right now, and you just see it's going up. But that's only a short period. Look at the 5 years prior, and you will see flat growth. And then for AI and other speculative investments, I lived through the dot-com crisis or the dot-com crash, where you saw like trillions disappear overnight. Companies that were high flyers disappeared. And the AI space for me is like right now in exactly the same space. Everything is right now exciting, but we're going to see the shakeout. It's coming.
That brings us to one of the questions we had from the registration questions. Folks are hearing about a bubble in the markets. Should
So,
they be worried about a crash?
a crash will always happen. So you need to be prepared. So don't put all your money in like a single stock, because if that crash, spread your risk around, like that you have multiple investments. And when there is a bubble, there is often certain technologies or certain areas of the market that is affected by the bubble. So bubbles happen when the stock market is like, it happens. But it's mostly because when people throw risk out the window and they just like speculating a lot and blinded by the risk of sometimes like seeing like this stock is not, or this industry is not going to continue to go up. And when the bubble happens, there's a rapid, like the stock market goes down. So be prepared, have stop losses that when the market goes down, sell. And a stop loss means I automatically sell that I don't lose all my money. Because people often like will have like, we will have a bubble, but you don't know if they're speculating because they have a position hoping people will sell, the stock will go down. I've seen that a lot when people will forecast a bubble. They really are hoping that the trades that they have, the price will drop, that they won't lose money. So
Mm.
you don't know when the bubble is going to happen. Just like like an accident, it happens. So no one can predict what will be the trigger moment for a bubble or a crash.
Yeah, definitely good to be prepared. Do you think it's unusual or advisable to have more than one account? For example, if someone had Robinhood and Charles Schwab or some combination of the orgs you mentioned?
You know, it depends. And it depends on how much money you have, because each account bring administration. So if you have two accounts, you need to get two documents from them when you file your taxes. And then you need to maintain like, how much money do I have in this account? What can I buy with that? How much money do I have in that account? Can I afford to buy it? So it's just more hassle. Is it worth it? If you have $1 million, by all means, have a few accounts. But if you have 100 or 1,000, is it worth the hassle?
That makes sense. So it might be something you grow into. Maybe you start with one, and then as your assets grow, you sign up for another one to sort of diversify.
Yeah. So currently under current laws, you have insurance deposit. The FDIC provides deposit insurance up to 250,000 in your account. So if you have $1 million, split that into 4 banks if you're worried your bank is like shaky. But if your money is in a big company like Fidelity, where like 1 in 3 people in America have their account, their likelihood of going under is much less than maybe a small local bank. So just decide, your money really will make your decision for you. How much do you have?
Yeah, that makes sense. You might have said this earlier, but we got a question about what's the max contribution limit for a Roth IRA for a teenager?
7,000. Some years it goes up with $500 or so, but this year it's 7,000. Same as
Okay.
last year.
Then can you buy partial shares through Fidelity?
Not as far as I know. They don't do fractional shares, but they do a form of like fixed cost investing. That some people have a strategy that they buy like an index fund, like maybe all the companies that's in the S&P 500, and they just put $100 into that. So as the market goes up or down, they buy $100 worth of that. So that is slightly different from like a fractional share, because that is like a fixed cost, like you're doing an investment over time, where a fractional share, you can buy a small percentage, like a $10 amount, for example.
Great, thank you. I can't believe we're already coming close to time. I think we could get in maybe one or two more questions, and then Annaline, I want to give you a chance to, give us some closing remarks. Um, what advice do you have for a teen who is interested in getting into day trading?
You know, I have a lot of teens that are interested in day trading, but the biggest, like for day trading, students don't have experience. And you buy one winning stock, that doesn't mean you're a good investor. So, and for day trading to be worth your while, you need a little more money than just $100. So I've had a number of teens over my summer, and actually two of them in my investing competition now. And they told me both, we lost our nerve. We were day trading and they completely stopped. Then they took my class to learn what to do better. And one of those students are actually lying in second position now in the investing competition. So,
Wow.
yeah,
So lots to learn. Speaking of the competition, we got a question. Is is there a prize for the competition and what is it?
$500 in cash. And then I have another $500 spread among the next four students. Like, I hope they will take that money and open a custodial account because they have been working really hard. Like, they are placing trades outside of the coaching hours. And each week I take an assessment of each student. How many trades do you have open? How many losers do you have? And I can see over time how the emotions have changed as they are learning to evaluate. Like, that 1, 2 days the stock is down doesn't mean, oh my gosh, the stock is down. It's just the stock is taking a breath, just like a person, and then it goes back up. So I don't think they realized how much they would learn in like the consistent week after week trading.
Yeah, sounds like a great opportunity. We have just a minute or two left. Annaline, thank you for your expertise for this really helpful presentation. Do you have any final advice for folks?
You know, start as soon as you can. Like, don't let your teen wait like until we're gonna start later. Before you know it, they're an adult, and then you look back and you say, if I started 10 years ago, like, if I knew when I was younger what I know now, I would have planned my life much differently. And that is my advice for all the teens. Just start when you are young. You have such an advantage. You just don't realize how good you have it.
Yes,
And if there's
Annaline, go ahead.
any questions, email me back, or we can also have a quick call. Like, I have often talked to parents about like they had questions about their teens, and a phone call can solve like 10 emails.
Yes, absolutely. And Annaline has been so generous. Her phone number is on the screen along with her email. That QR code will take you to, I believe, their website where you can learn more about those classes she was mentioning. Also, please remember this recording is going to be emailed to you, so you will have access to all of her slides and her contact information. I hope you reach out, learn more, check out those classes. Hopefully, at least one of them will work for you. Really great opportunity. And thanks everyone for coming. Thank you, Annaline, so much for your time.
Thank you all for coming, and thank you very much for the questions. Enjoy the rest of the evening.
Take good care, everyone.